questions that related to your annuities and how you can solve the annuities questions in the exam. We will understand in this session. Okay, so let's start the session. One update also from our side, that is two batches that is currently running for your upcoming examination. That is first is revision batch and second is MCQs batch, where you can enroll with the code that is Y422, and with this code you can get the maximum discount on every JAIIB and CAIIB products, like whatever you want to just enroll that. Okay, so in MCQs batch you will get the 3000 possible questions that may come in the examinations, and in the revision batch just you just cover all the chapters of all the subjects. Okay, so that all just the complete package for your preparation, so you can also enroll that. Okay, so now let's start the session. So the first question, that is how much of money will a businessman owe to bank if he borrowed 50,000 per year at 10% interest during each of his 4 years. Okay, so the first thing that you have to understand what we understand by the annuities. Okay, so whenever we just understand like annuity, so you have to understand that is annuity is nothing but a series of the payments. Okay, like it is a series of the payments at the regular interval. Like in this question, how much money will a businessman owe to bank if he borrowed 50,000 per year? That means that 50,000 per year, this is considered as a series of the payment and at a regular interval, like during each of his 4 years. Okay, so from this we can understand this is a question of the annuity, and we can solve this question by the annuities, right? After that, one more thing we have to understand, like annuities are actually of the two types. First, that is known as the ordinary annuity, and another one that is known as the annuity due. Okay, so now what is the difference between the ordinary annuity and the annuity due? The basic difference between the ordinary annuity and the annuity due, that is, this is considered when the payment of the period just end of the period. Okay, this is considered when we are just talking about the end of the period, and this is considered when we are talking about the beginning of the period, right? So we can understand like this is our period lines. Okay, and like this is a time period line, and this is a starting period, and this is our ending period. Okay, so whenever we are talking about for the like payment for the beginning of the period, so that is known as our annuity due. Okay, and whenever we are talking about the ending period, so payment that is at the end of the year, so that is known, it may be at the end of the year or say at the end of the period. Okay, that depends on the question. So then this is a case for the ordinary annuity. Okay, I hope it is understandable for everyone. So now the thing that what is the formula of the ordinary annuity and the annuity due, because many times in the examination we just saw like many times the examiner actually asks the formula of the annuity due or say ordinary annuity. So you can understand by the ordinary annuity and annuity due, like if we are talking about the ordinary annuity formula, that is the like future value that is equal to the C, which is known as a cash flow. Okay, it is known as the kilo cash flow, and it is multiplied by the 1 plus r to the power n minus 1, and it is divided by the r. So this is known as a formula for the future value of the ordinary annuity. Okay, after that we are talking about, if we are say what is the formula for the present value of the ordinary annuity. So the formula of the present value of the ordinary annuity, it is just opposite of the future value. Okay, like that is cash flow per period, and it is multiplied by the 1 minus 1 plus r to the power minus n, and it is divided by the r. So this is a formula for the present value of the ordinary annuity, right? So now the thing that how we can just memorize this, how we can just memorize the difference between the future value and the present value. So just opposite of the future value is known as the present value. Okay, so like in this formula, whatever the component we written in with the negative figure, in the opposite of the present value, we just written this we just written this value with the opposite of the future value. Like 1 plus r to the power n here positive, so just write this is a negative, and with the term that is to the power minus n. Okay, this is very important thing to understand. Okay, so that is like in this future value 1 is with the negative figure, so in the present value 1 is a positive figure, as well as a 1 plus r to the power n is with the negative figure, and it is to the power of the minus n. So this is the basic difference between the future value of the ordinary annuity as well as the present value of the ordinary annuity. I hope it is now clear for everyone, right? So what I am going to say that, just understand this. If I say this is a formula for the ordinary annuity, so what is the formula for the annuity due? So you do not have to be so much memorize so many things. Just multiplied by the 1 plus r, and now this formula is not so much ordinary. Now it is a formula for the annuity due. Okay, so we say that if we just multiply by the 1 plus r, then this formula become the annuity due of the future value, or say annuity due of the present value. Okay, so this is the way we solve the annuity questions. So now just write down this formula on your paper, whatever just copy you have. So just write down this formula and we will solve the some questions based on these formulas. Okay, because in the examination you will get the questions like in the theoretical term, if I say that is in the like formula for the annuity of the present value. So for the you do not have to learn the formula for the annuity due. You know that for the calculating the annuity due you only have to multiply by the 1 plus r component. Okay, so you only have to learn that is future value and the present value like this. Okay, so future value, just start with the future value, that is cash flow. See, just understand as a cash flow, like here 50,000 per year we are talking about. So this is known as a cash flow, and it is to multiply by the 1 plus r to the power n minus 1. And in the present, for calculating in the present value, just opposite of this, like 1 minus 1 plus r to the power minus n. That's it. Okay, so now we are going to solve the questions based on these formulas. So the first question, that is how much of money will a businessman owe to bank if he borrowed 50,000 per year at 10% interest during each of his 4 years. Okay, so from this question we can just conclude that that is cash flow, which is given 50,000 rupees, rate of interest which is given 10%, so 10% we can also write as 0.1, and the term period which is given here, that is 4 years. Okay, so this is all things we have the given here. And you know the calculation like this, the already in the examination the these calculations already given to you. But if it is not given, so you can also just calculate this value. If I say how you can calculate this value, like 1.1 to the power 4, how you can calculate this in your calculator. So just simply just write 1.1 into your calci, and just it is a 1.1. all right, and just press the multiple button. Okay, and after that press the 5 times the equal sign. Okay, so this is the way you can just solve the this calculation, like 1.1 to the power 4 if you have to calculate. So just first write in your calculator, that is 1.1. after that just press the multiple button and press 5 times, because here you have to calculate to the power 4. So just press the 5 times the equal button. And if it is a like it is to the power of the 5, suppose that you have to calculate for the to the power of the 5, so just press 6 times the this equal button. Okay, so I hope it is now understandable for everyone. Otherwise these values are already just given to you in the examination. So now if I say that is how you can calculate the future value, because you have to just calculate like how much of money will a businessman owe to bank if he borrowed 50,000 per year, right? So we know that we have to calculate here future value. So future value, what will be the future value of this whatever the cash flow is happening? So 50,000 rupees here, that is known as cash flow, and we have to calculate the future value. So 1 plus rate of interest, which is given 0.1. So just write 0.1, and it is to the power of the 4. Okay, and minus 1, and again it is divided by the zero point 0.1. So now you only have to calculate like this value will become 5 lakh. Okay, and 1.1 to the power 4, which is given in the like question, that is 1.4641 minus 1. And if we are just going to solve this, and we will get the answer here, that will be equal to your something. Just solve this and tell me what will be the answer. That will be 2,32,050 rupees, right? So that will be your answer. So this is the first option. That would be your answer. I hope it is understandable for everyone. All right. Okay. So now we are just understanding another question. Another question, that is a person deposit 1,000 rupees at the end of the each year for the 5 years, and if the interest rate is 5% per annum, so how much amount will he have at the end of the 5 years? Again, this is a question like 1,000 rupees at the end of the each year. So I already told you, like annuity, whenever we are talking about like annuity, that is a series of the payment. Okay, so in this question, that is 1,000 rupees that a person depositing for like for the 5 years, like for each year. That means now we also can apply the annuity formula. So the future value of the ordinary annuity, because this is a question about the at end of the each year. So whenever we are talking about like ending of the period, so we solve by the ordinary annuity question and ordinary annuity formula, right? So here again, if I say what the cash flow is given, we know the what is the formula of this. That is C multiplied by 1 plus R to the power n minus 1, and it is divided by the R. Okay. So now the cash flow which is given 1,000 rupees. So just write here 1,000 rupees, and 1 plus, that is rate of interest, which is given 0.05, because we can just write 5% equal to the 0.05. All right. So just write here 0.05, and it is to the power of the, that is given the 5 years. This n actually denotes the number of the payments. Okay, so never be confused between the number of the payment and the number of the years. Okay, so whenever we are talking about like the person or the actually depositing the 1,000 rupees at the end of the each year, that means the number of the payment is actually the 5. Okay, so just write here like this, and this rate of interest, which is the 0.05 here. And now we have to solve this. So how we can solve? Like the value is already given in the question. 1.05 to the power 5, it is given 1.2762 minus 1, and it is divided by the 0.05. Again, we can just solve this, like this value will be 20,000 and 0.2762. Okay, so just solve this and tell me what will be the value here. Just solve this. Let me calculate this also. That will be the just tell me what will be the value. 0.2762. So this value would be 5,524. All right. So the correct answer, that will be your C, the third option. Okay. I hope it is now clear for everyone. So this is how we solve these kind of the questions. Okay. Now solve another question. So in this question, like a company plans to purchase a new machine in for 3.5 lakhs in 5 years. So that means company just want to purchase 3.5 lakhs of just value of the machine in the 5 years. So determine the annual savings required to purchase a machine if the return is 12%. Okay. So suppose that company just want to purchase a machine. 1 minute. Suppose that company want to purchase a machine which is the value of the 3.5 lakh. So this is the machine which is the value of the 3.5 lakh, and company just want to purchase this machine in the 5 years. So what just annual savings required? That means now it is again the question like you have to just save the annually. Okay, so again it is a question of the annuity, like just company want to just save some annual amount. Okay, so again this is a question of the annuity. So here the future value which is given, and cash flow, here actually you have to calculate the cash flow, which is cash flow per period, right? So that cash flow, that is multiplied by the 1 plus r to the power n minus 1, and again it is divided by the r. So here we have to calculate the cash flow. So just future value which is given here, 3,50,000 rupees. So just write here, and it is multiplied by the rate of interest which is given 12%. So 12% we can also write with the 0.12, okay, and it is divided by the, that is 1 plus r to the power n. So this will be 1 plus 0.12, which is also can write as a 1.12 to the power 5, and it is minus 1, okay. So now we only have to just solve the value for the cash flow. So we know that that is if we just multiply it by the 3,50,000 into 0.2, so what will be the value it is? Just calculate that, that this value would be 42,000, okay. And now the 1.1 to the power 5 value it is given 1.7627 and minus 1, so 42,000 divided by the 0.7627, and this value would be your, and tell me what will be the answer here. That 42,000 divided by the 0.7627, so the value that would be 55,067 something, okay. This is the value, this is the value everyone is getting, but in the options there are no any values like given. So we just adding another option, that is approximately 55,067, or say 50,000, 55,000 something. So that would be your answer. So let me calculate once again, that is 42,000 and it is divided by the 0.7627. Is it right? Is it right? Okay. So that would be your answer, that is 55,067 rupees. That would be your answer here. Okay. So this is how we can solve, like whenever you just get the question in the exam that is considered as a series of the payment, or say the annually payment, that means this is the question for the annuity, okay. So like this question is a very good, if I say, if from the exam point of view, like in this future value is already given and all the values is already given, you have to just calculate the cash flow, because this is the question about that is annual savings you have to calculate here, okay. So I hope it is understandable for everyone, right? Now attend any another question. So another question, that is Mr. A is to receive 10,000 rupees as interest on the bonds by end of the each year for 5 years at 5% rate of interest. So we just understand that this is a question of the ordinary annuity, because again I am just repeating, that is ordinary annuity, that means ending of the period. Whenever we are talking about the ending of the period, like whenever the payment that is just depositing, or say just receiving at the ending of the year, so that is known as the case of the ordinary annuity, right? So the Mr. A, which is just to receive 10,000 as interest on the bond by end of the each year for the 5 years at 5% rate of interest, so calculate the present value of the amount he is to receive. Now the question is all about, like we know, if I'm talking about a bond, like in this question the thing about the bond, so bond is actually issued by the government or corporations, okay, to just raising the fund from the general investors, and average and the and return of this just like government and corporation, which is also known as the issuer of the bond, just paying the interest as well as the principal at the maturity time, okay, and just paying the interest at just at the regular interval, or say at the just annually, it depends whatever the conditions of the bond, okay. So this is the case that Mr. A is to receive 10,000 as an interest on the bonds by end of the each year. So again this is a question for the annuity, and we have to calculate here the present value of the ordinary annuity, right? So here we have to calculate the present value of the ordinary annuity. So we know the formula, that is cash flow. Okay. Now, if you just confuse between the future value of the ordinary annuity and the present value of the ordinary annuity, so just come back to the basic. Like what I explained here, to you, like future value of the ordinary annuity, that is equal to cash flow, and it is multiplied by the 1 plus r to the power n minus 1, and it is divided by the r. Just learn this formula only, okay. And present value is just opposite of this, like whatever the components we have written in this with the positive figure, just write the negative with that, like cash flow. Here 1 is the negative, so just keep this positive, and 1 plus r to the power minus n. For calculating the present value, we just using the term minus n. Why we are using the term minus n? Because we are here actually calculating the present value of the future cash inflow. So whatever we are getting in the future, we are just going to calculate the present value of that. That means we are just moving towards to the present value from the future, or say just opposite of this. That's why we are using the term for the minus n. Okay, so now we just only have to apply the formula here. So we know that the present value, that is equal to cash flow, and it is multiplied by the 1 minus 1 plus r to the power minus n, and again it is divided by the r. I hope it is now memorized for you, all of you guys. So cash flow, which is given here 10,000 rupees, so just write 10,000, and it is multiplied by the 1 minus again 1 plus rate of interest, which is 5%, which is also can be write as 0.05, isn't it? Okay, so just write here 0.05, and it is to the power of the minus 5. Again it is divided by the rate of interest, which is 0.05. Now if I say just solve this, and you will get this value, what, that is 2 lakh something. Okay, that value will be 2 lakh, and 1 minus, now 1.05 to the power minus 5, that value is already given in the question, that is 0.73783. So just write here, and now you only have to calculate this. So what value it is this? Just tell me what is the value here. So that value is 0.217, right? So this will be your 43,400 rupees. Okay, so that would be your value. Okay, so that's all for this session. So in this session we just understand what is the annuities, and what is the formula of the present value of the annuity, what is the formula for the future value of the ordinary annuity, as well as this is very simple to understand ordinary annuity and the annuity due formula, and very easy to understand, very easy to memorize also. Okay, so I hope this lecture is useful for everyone. So that's all for this session. If you are liking our effort, please do not forget to hit the like button on this video. And if you have not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel, so that you can get the notifications of the important lectures, as well as the notifications of the important news that is related to your examination. Okay. So now thanks for watching me here. Thanks for joining me here. Like this video if you're liking our effort, liking our content, and share this video to your friends, so that maximum number of the colleagues can join with us.